Let's start with the Treasury's conversation then, because we touched on this yesterday a little bit. Former Fed officials weighing in, expectations rising of an earlier cut in rates, but then we got that GDP data. How have Treasury markets been coping with all these mixed signals?
They've been quite volatile, I think it would be fair to say. Certainly yesterday we saw a little bit of maybe the market getting a bit ahead of itself. We were seeing a really big rally in Treasuries, particularly in European hours, as folk kind of processed some of those comments from Dudley about the prospect of maybe cutting as soon as this month, and then kind of like moved on to look at Mohamed El-Erian's comments, where basically he was saying that if the Fed doesn't get on with it, it risks having kind of a policy mistake. So that really kind of got everyone jazzed up and buying Treasuries on the expectation that maybe there could be a cut coming, something that the swap market really hasn't been pricing. But then we saw that really kind of paring back as GDP data came out, and it showed that the economy is in actually really good nick. It's been growing very, very healthily indeed. So that kind of gives a little bit more wiggle room for the Fed when it meets next week to kind of consider the full picture of data and decide whether now is the right time to cut or whether they would like to see a little bit more of a development. So there's this real kind of interesting battle, and I think the market is going to continue to be very volatile, particularly around PCE data that we obviously have later out today that will give the Fed its kind of last read on inflation and whether prices are heading in the right direction.
Rachel, can I skip ahead to the Japanese yen? Because your team put out a fabulous piece about how this is affecting money flows and the fact that you are seeing such yen appreciation lately that's kind of shaking up portfolios around the world. Walk us through what's going on in Japan and the positioning around the yen.
Yeah, no, I think that's been an absolutely fascinating story. Just the stretched positioning in the yen has really been kind of a thing that's been a function of currency markets all year. We've been seeing shorts growing week in, week out, and suddenly they've all decided to rush for the exits at the same time. So you've been seeing a lot of these sort of carry trades being liquidated. I mean, we saw the impact through to other markets very, very clearly yesterday with how kind of the Chinese yuan reacted. We were seeing the yuan, which has been another carry trade sort of target, a funding currency, also kind of like gaining in the same way that the yen was gaining. But I think the yen is going to be very interesting over the next few days because, we really saw how fragile that rally can be. Yen was up at 1.1% yesterday and then reversed completely in US hours following that GDP data. So a lot is going to come down to the Bank of Japan meeting next week and the Fed meeting next week. Yeah. At the moment, we have about a 70% chance of a BOJ hike next week. Now, there's been some speculation that because the yen has rallied so much, that the BOJ will feel less compelled, less pushed to actually go ahead and start raising rates again. But if they do that, then I think you could see that kind of rally in the yen reverse very, very quickly indeed.
Just briefly, we've got some volatility back in equity markets, courtesy of disappointing earnings news.
Yeah, the VIX has really been on a tear. It's sort of risen to the highest since April, and it's within a whisker of the levels it last reached in October. The issue is going to be whether it can it keeps on going or whether actually we see some of the earnings stabilise and volatility start to head back